The Financial Intelligence Centre has cautioned role players in the financial sector against thinking that small businesses are at low risk when it comes to money laundering. Now, this emerged during public hearings on the draft amendments to the Financial Intelligence Centre's Act's regulations that are aimed at tightening loopholes in the fight against money laundering and the financing of terrorist activities. This as the country tries to meet the deadline to tighten its financial intelligence framework to comply with international standards or risk being greylisted.
South Africa's anti-money laundering legislative framework is said to be behind international standards. Failure to address identified deficiencies will have devastating consequences for the country's financial institutions transacting overseas. The Financial Intelligence Centre says the draft amendments require that both big and small businesses to comply, as it's not about the size of the business, but the type of products or customers.
A lawyer that facilitates import-export transactions for institutions in the chemicals industry, for instance, would be dealing with very high-risk transactions, high-risk customers, high-risk geographic locations. The fact that it's a small firm does not make a difference or does not reduce the risk of the business that it's dealing in.
Some of the role players in the financial sector support the proposed amendments. However, they've expressed some concerns about the cost implications of compliance, especially on small, medium, and micro enterprises, while others believe that they must be limited only to cash transactions.
I will now have to spend money on this onboarding, certain validations of the people, registering with the FIC, reporting certain transactions. So just in terms of that, our members as accountants already have a code of professional conduct. We talk about non-compliance laws and regulations. They're already supposed to report when there's any non-compliance. So there's already that type of obligation. But all this now with regards to FIC would be new and would take time and cost and effort for them to implement.
Meanwhile, the Standing Committee on Finance says if the October deadline is missed, the National Treasury will have to account as it has delayed in submitting the proposed amendments.
In the public domain out there, it was like Parliament is holding on to processing this matter. South Africa will be greylisted because of Parliament. That's not the case. Let that be cleared, that this matter is coming to us for the first time. And Parliament doesn't take shortcuts in processing matters. This is a matter of public interest, so we have to make sure that we go through the public hearings.
The proposed amendments will have to be approved by Parliament. Lula Mamatya, SABC News, Parliament.